Why are gas prices higher and why are food prices going up and portion sizes going down at grocery stores and restaurants?
It's because of inflation. The Federal Reserve is creating massive monetary inflation to save its large member banks, foreign banks and other large corporations. The Fed also lets the U.S. government borrow as much as it wants at low interest rates.
But I hear the mainstream media and mainstream economists blaming an increase in commodity prices on speculators. Are prices going up solely because of speculators?
No. Would those speculators even have much money to speculate with if the Ben Bernanke and the Federal Reserve were not creating trillions in U.S. dollars and handing it out to banks as reserves? The Fed is creating the speculation by flooding the system with cheap money that Wall Street firms can basically borrow at 0% interest rates. All of that money will not sit by idly. It will go somewhere to seek a higher return.
But I thought it was smart for the Ben Bernanke to create all of the money to save the banks and to prevent the deflation? Aren't all of the mainstream economists and most of the academic economists saying we need to do everything we can to prevent the deflation?
Deflation is the boogeyman. The Fed needs to continue its excuse to bail out the large banks, large corporations and a spendthrift U.S. government filled with politicians from both parties who only care about handing out money to survive the next election.
Why do the academic economists only worry about deflation?
Because most academic economists are Keynesian and they believe that a certain amount of inflation is actually a good thing for a healthy economy. If they can push this lever or that lever, they believe they can create inflation and then easily stop the inflation anytime they want. But the law of unintended consequences says otherwise. If you watch the Academy Award-winning documentary, Inside Job, you will learn that the Fed has bought off many of the economists and academia with abnormally large consulting fees and research grants to write about how we must fight the deflation at all costs.
But why would the Fed pay academic economists large consulting fees and research grants? Wouldn't they want to hear a different point of view to see if they miss something?
No. The Fed does not want any dissenting opinions from economists. If they did, they would actually read work or seriously listen to opinions from economists from the Austrian School of Economics. The Austrian School has been heavily criticizing the Fed since the Fed was conceived in 1912 and then created in 1930.
What is this Austrian School and why do they not like the Fed?
The Austrian School of Economics is the free market school of economics. Prior to Keynes publishing the general theory in the 1920s, it was the economics everyone used. Austrians do not like central banking in general, they prefer something called free banking. They dislike the Fed because they can create boom and bust cycles in the economy by expanding or contracting the money supply or available credit. The Fed is a banking cartel and it also has a monopoly on money, and the Austrians like free markets and competition in every sector of the economy, including money itself. Now, the Fed and other Keynesians consider the Austrian school a cult, even though they have correctly predicted every financial panic and depression in the U.S. since the Fed was created. Austrian school economists also have a hard time getting tenure at many universities. They have a very good track record for predictions.
It sounds like the Fed should at least be listening to the Austrian school's arguments. How bad is inflation currently and how much worse can it get?
The Austrians calculate that inflation is currently running at over double digits in the U.S. already for this year, and things are accelerating for the worse. If the Ben Bernanke and the Fed announce a QE2 extension for $800 billion in U.S. Treasury purchases or worse, they announce an expanded QE3 program, we could see much higher food and energy prices at the minimum. Currently, the Fed is underestimating the amount of inflation it has created in the system, and because of this it may end up creating severe inflation or worse, runaway hyperinflation, because it is staring at bad indicators of inflation like the CPI and actually believing the data.
But what about the deflation threat?
The deflation could happen if the U.S. government stops spending money. The U.S. government is ramping up spending to make up for the lack of spending in the private sector. Even if private sector credit does contract, the Fed might destroy base money in the process as it continues to lend unlimited amounts to the U.S. government and to its member banks to keep them from writing off bad debt, bad investments and overvalued assets on their balance sheets.
So what does the threat of worsening inflation mean for American consumers, American savers, and American investors?
It means a lower standard of living for many in the U.S. as inflation destroys the purchasing power of the U.S. dollar. Food and energy prices will be the things most Americans begin to notice first about inflation. It also means that savers and more conservative investors who normally would not have invested in commodities or natural resource stocks in a more stable economic environment will be forced to speculate or take more risk with their money in order to preserve their wealth, maintain their same standard of living, and to keep pace or beat the inflation rate. For those Americans unable to invest in commodities, it means a lower standard of living. If inflation gets bad enough, it could potentially wipe out the entire American middle class.
Why would the Ben Bernanke and the Fed risk doing this then if the stakes could potentially be that high?
The Fed believes it can stop inflation anytime it wants, despite its poor track record for being able to predict anything accurately since the tech bubble burst, and it has also been poor at making smart adjustments to its policy. The Fed's main priorities are with saving its large member banks and continuing to allow the U.S. government to borrow as much money as it wants as cheaply as possible. The Fed believes devaluing the dollar is actually a good thing in that it will quickly bring American manufacturing jobs back to the U.S. from China and elsewhere. It also wants to devalue the U.S. debt and pay it back in cheaper dollars.
Do you think what the Fed is doing will bring back jobs quickly?
Not quick enough to matter. Unemployment should remain high or worsen, while the everyday things Americans need will be heavily increasing in price or will be shrinking in size or portion.
What can I do to protect myself?
Don't save large amounts of money in the U.S. dollar or other paper, fiat currencies for the foreseeable future. Also, start looking up the Fed's track record from predictions it has made in the past. Read articles from the Austrian School of Economics just so you understand the other side's argument at the very minimum. You should start to see that what the Austrians have to say makes a lot of sense.